Markets are mixed today as of this recording anyways, with 30 minutes or 20 minutes left to go to the close on some news that's going to make the Fed's job a little bit more difficult here in the near term. Let's take a look at what's going on. The Dow currently up. Again, it's about 20 minutes till the close of the markets, up about 1%, S&P up 0.33, NASDAQ down just a little bit. So we'll just have to see what the close looks like. As I always say, you want to watch the close. That kind of gives you an indication of the investors' sentiment. Is that momentum into the close? Google is cutting down on employees' laptops, services, and staplers for a multi-year savings. They must go through a lot of staplers at Google. So interesting news. So obviously, the big news today was the announcement yesterday that OPEC is going to cut production to help increase oil prices, which ultimately are going to result in higher gas prices, which are on the way up anyways. As you know, going into the spring and the summer, gas prices always go up because it's travel season, summer season, prices on food, everything goes up. So it's going to make the Fed's job even more difficult. Of course, housing prices have jumped with the sudden decline in rates, with treasuries being down due to the market rally. So the house price index, cost of housing, all those things are up. Markets are seeing in some areas, again, multiple offers, things like that. And then, of course, in other news, Trump has landed in New York as he prepares to turn himself in on the indictment in the hush money case. So this is going to be fascinating news to follow here with that, regardless of which side you're on there. Still pretty unprecedented times in a lot of ways this year. Last year, just amazing markets. So amazing news, amazing happenings, and it's just unbelievable times we're in. So let's take a look at the Dow here on this multi-day pop, still on a run for the last 4 days in a row, has been green for the Dow. Continuing into the resistance zone up here, NASDAQ has broken the previous range, working on this level here of 1367, S&P, same thing. All ranging right now, consolidating, digesting all the news, awaiting inflation data, awaiting jobs data, things like that. Now with oil prices, let's take a look at that. Here's oil, popped on the news today, but down just a little bit. And now projections are all over the map. People calling for $100 oil again. Realistically, what are we looking? Some people are saying it's going to return back to the lows. Is this a short-term thing, or is this going to be longer term? And as I said, going into the summer, that's going to put pressure on demand and fuel prices anyways. Global travel is through the roof. One of the other stories that was out today is passports. If you're looking to get a passport, there's a several month backlog on passport issuance because of all of the demand for travel. I read an article on it earlier today. Here we go. U.S. passport delays are months long and could get worse because the demand for international travel has surged from the United States. That's led to a backlog of U.S. passport applications, and it's taking as much as 4 months for a routine passport. So if you want to travel this summer, you better get on it now. I just renewed my global entry not too long ago. I put my renewal in back in May, and I just got it back last week. So they're way behind on, I put it in May of last year, and I just got it back last week. So I've been waiting for that global entry renewal for quite some time. So let's jump back into the charts here and keep going. So the VIX the other day, we were kind of watching the VIX, still working its way. It popped a little bit this morning. Markets were down just a little bit, working its way down to that 18 level. Generally, that's when you get that reversal on the DIX. The Dixie kind of hanging out here. Are we going to catch a bounce? Is this going to be a W pattern, Dixie reversing, which puts pressure on Bitcoin, gold, things like that, and obviously indicates reversal in markets? There's the 2-year kind of hanging out in this range. 10-year still down in that 3.4 range, reducing interest rates, keeping pricing keeping house prices under pressure because of mortgage rates. And if you get the right kind of a mortgage product, you can still get rates in the threes. If you get a buy down, like a 3-2-1 buy down or a 2-1 buy down, 3-2-1 buy down. I bought my first house on that when interest rates back in 1990, when interest rates were at 10%. What it does is it buys your rate down 3 percentage points, and then it goes up every year by 1%. So my first year it was 7%, second year 8%, third year 9%. So it was a 3-to-1 buy down, or it might have been 7, 8, 9, I think is what it did. So in today's world, if rates are 6%, you can start at 3. 4, 5, 6 and go that way and refinance, hopefully if rates come back down, and then you never end up paying that 6% rate, which is kind of where mortgage rates are right now. But like I said, a lot of areas are still seeing multiple offers, limited inventory, things like that. There's oil again. Let's take a look at gold. Gold kind of ranging, looking for that breakout. So we'll have to see if that's going to continue to hold up. And then, of course, let's take a look at Bitcoin here. And I've got a couple things marked out at Bitcoin. And what these are is these are both April. So this is April of 2021. And Bitcoin after that continued a drop ultimately of about 54%. Then we had April of 2022. Bitcoin ultimately dropped initially 46%, 64%. And then as we know, from that point, 67% to that September bottom right in here, or that November bottom, I'm sorry, right there, 15.6. Of course, this was November of 2021 when the actual top came in. But the question is, are we going to see a repeat here in April? Is the market going to roll over and then just, drop right on down? Let's take a look at some ranges. If it did, not saying it will, there's a lot of momentum right now in terms of this price action kind of being propped up here. This is not retail jumping in with FOMO. This is a manipulated move driven by, investment funds, hedge funds, and just, flat out manipulation for Binance and all those other things, kind of keeping price, jacking the price up and keeping it propped up in this area. Of course, Bitcoin just lagging traditional markets in the recent rally with the NASDAQ rallying everything. So a lot of this is the, anticipation that the Fed is going to cut rates, trying to suck people in and kind of distribute here. So if it did drop, and what would be the potential there? If it dropped 30%, puts it right back down here at 19,500, that 20,000 level that we saw back there. This was March 10th. And let's take a look at, a bigger drop of 40%, puts it right back down around these lows here again that we reached back in November. And beyond that, I don't know. It would take a pretty big market event at this point. Traditional markets would have to really sell off. You'd have to have some serious things going on in the economy besides just the Fed rate cut or rate hikes, in order to drive markets that low. But as we know with Bitcoin, anything is possible, and you could potentially see a nice rebound. But the last two April, May timeframes going into June, that was a very difficult time for Bitcoin. A lot of people traveling, a lot of things happening in terms of, bills coming due from the holidays, things like that. We have the pandemic hangover, people wanting to travel, spending all their money on travel, things like that. So not a lot of people really putting money into the markets and paying attention right now. So attention could wane. This could potentially drop back down to that 18,000 level. That's the next level of consolidation, around 18 to 19, 20,000 in this area, before ultimately potentially going to check those lows. If Bitcoin did continue, the next level you're looking for, obviously, is a break of the range right in this area here. So that's right around that $30,000 level. So ultimately what you'd want to see is a test of that and then continuation up from there for Bitcoin. But right now, until the Fed is done, you just can't call bull market risk back on right now until the Fed has paused at least, much less pivoted. And generally, if the Fed's going to pivot, that's going to be bad news for the economy anyways. And we could potentially see more distress than what you're really wanting. So be careful what you wish for, in terms of looking for a Fed pivot. Let's take a look at Ethereum. Ethereum testing the range here, kind of consolidating, deciding whether it's going to be a back test and rejection, or if there's going to be continuation on. And what's keeping the price propped up a lot too is liquidation. So a lot of people want to short these areas on Bitcoin and on Ethereum. Let's take a look at the dominance here, because dominance has reached out, to this trend line here since basically 2021. Every time it hits this top of the trend line, it reverses back down. And there's your low in September of 22 right there. And there's a low in the dominance in November, back when those lows were put in. So we'll have to see if Bitcoin can continue its strength and move on from there. So there's that September area right here. Then there's that November area right there for Bitcoin. XRP hanging out right here in the top level of this range after it broke out a couple of times. The question is, can it continue from here, or will it just reverse back down to the bottom of this range again, like it did the last time it popped up in this area? Cardano just kind of hanging out after a little run. Same thing with Solana. Almost all the major altcoins kind of following suit. Everything just consolidating right now, awaiting the next move from the Fed, which is all going to depend on what the inflation outlook looks like, what the job market looks like. Again, the job market is still really tight, and until that is under control, it's going to be very difficult to get inflation down, because that's keeping pressure on prices. And then again, with the summer, food prices go up, travel costs go up. Consumers are still resilient; they're still strong. The one thing that could be in effect this year is, and I'm hearing this throughout the community, is that some Airbnb properties are under pressure because more demand to travel globally since the world is open again. So you're going to see some Airbnb properties that are going to be under pressure and struggling to maintain their cash flows that they did in years prior. So it'll be interesting to see what happens there. And then other areas, they're doing fine, generally in resort areas or tourist destination areas where there's other demand drivers that keep those Airbnbs fully occupied. But again, a lot of people are traveling abroad now that the world has opened back up. So that is going to put pressure on the local Airbnb markets, hotel markets, and things like that around the country that benefited from the pandemic and the lockdown. So those are the things that I'm looking at. If you're new to the channel, this channel is all about entrepreneurship, real estate investing, real estate development, investing in markets, crypto, starting businesses, buying businesses, scaling and exiting, reinvesting those profits into other assets so that you can grow and sustain your wealth for generations. So that's what we talk about on this channel. I'll see you on the next video.